Good evening, traders. Good evening. Hold on. I thought I might consider doing a talk this evening with a camera on. You don't have to have it on if you want, but sometimes people prefer to see a face. One of the things I just need to do here quickly is just fix up the brightness, which I'm going to do here in a moment. So I'll switch that on and I'll switch that off. I have control over it. There we go. It should be fine. There we go. Okay. So, good evening, everyone. Big warm welcome. Thank you for joining me. I think more and more people will come in. Tonight's topic is crypto anomalies, underrated opportunities in the crypto market. I think what I want to do is have a look at the broader market, what's going on in general, and then see how that ties into the cryptos as well. There should be some good moves happening at the moment. And first of all, can I do a sound check? Can you just let me know if you can hear me? Is the sound all right? On my side, it's green lights. It all looks good. So sound should be good. If you can just let me know that you can hear me, thanks. That would be much appreciated. So there's a risk disclaimer. I need to give you an opportunity to digest this. I can see obviously more and more people. Hi, Diana. I can see you've joined as well. Sound is good. Thank you very much. And I can see more and more of you sort of joining in. I thought I had enough to drink. I can tell I'm going to run out of liquids while I'm talking. Fluids, I should say. So I am based in the city of London. It's been some good. We've had some really good trading last couple of days. I want to explain why. I'd love to give you a sense of what. And actually, if you were with me, likewise, nice to see you again. And if you were with me on, I think it was a Tuesday. Well, today's Tuesday. If it was, when was it? So it was last week. I actually went through the trading plan for this week. I'm just going through this. So the last time I was here, was it Thursday that we went through this? No, it must have been. No, it was. That's right. Anyway, we went through what I was looking for the markets to do. Markets pretty much beautifully, thank you, on Wednesday unfolded. And it played out nicely. It doesn't always play out exactly that way, but it appears to so far. I think there are still some good opportunities, and I think that this will also present itself in the crypto market. So on the agenda, we're going to have a look, an overview of the crypto markets and the current market conditions. We're then going to have a look at key trends and patterns of the crypto markets and building a watch list with multiple crypto assets. Fine. So I've got both the platforms open, and something that happens to me, and I'm not sure if it happens to you or not, but I'm going to bring it up. I noticed that when I loaded up my charts today, the charts were just struggling to refresh, and I think this has happened in a couple of webinars I've done. So one of the solutions is down here on the bottom right-hand side. If you hold your mouse point, you can actually jump between different servers. So what I did was switch to a different server, any one of these, and then I found suddenly the price action was updating correctly. So if that does happen to you, if that's the case, go for it. Obviously, I've got the browser version open as well. So I've got a backup there, but I was just saying I usually will use the MT5 version. Okay, so what I'm going to do is usually I would go and spend some time on the other markets. What I'm going to do now is let's go straight through and have a look at what's going on with cryptos. So we'll go and open up Bitcoin. So let's get a sense of what's going on with Bitcoin at the moment. So if we look at it from a monthly perspective, this is obviously important to get a bigger picture. Where are we at the moment? So we've got a serious level that we've encountered some resistance at in the past. Market came up, had a really big boom. What's interesting about all of this, to me at any rate, is that the very, very first time we heard about Bitcoin and all the billionaires and multimillionaires that were made, that was during this period here. We then had another big move to the upside. And this is important because I would say that it's around about here in this area where cryptos started to gain the interest of the bigger institutions. It's not that the institutions weren't aware that they existed, but it was where they started to go, you know what, maybe we should start thinking of ways to create products and including cryptos in that. Banks started coming up with what are called central bank digital currencies, CBDCs, not to be confused with CBDs, which is cannabis oils, but CBDCs. And so we can see that there's this adoption of cryptos. So to just quickly go back quick history lesson. I shouldn't say it'll be a short one, but the history lesson itself took place over many years. Remember that a lot of our money currently that sits in the bank is leveraged digitally, meaning that there was a time when you held, you would barter for goods. So you would give, you go back 2,000 years ago or more, and you would barter with somebody else. You go, well, I want to buy that goat, and I have, I don't know, all this wood. So I can give you all the wood to build your house, but I want to buy the goats, and you would trade for that. And then very quickly, there was this need for some sort of common currency so that you could say, okay, well, the wood is worth this much gold or silver or bronze, and the goat is worth that much. And then it stabilized because people could find a value for certain things. Worked really well. And I believe it originated in Venice. I think banking, the roots of banking, I think, kicked off in Venice, where basically wealthy merchants offered the services of, well, I'll tell you what, I've got a very safe vault here. Why don't you keep your gold in my vault, and then you keep a gold in your vault and you pay me a service for that, and that's what I'll do. Then they came up with this idea of, well, I'm going somewhere with this, by the way. And then they said, well, they came up with this idea of, well, other people want to borrow some gold, so what if I lend them your gold and I'll pay you some money for that? And so we got the idea of interest on on deposits in banks. Then what happened was, the problem was they loved it because they were making money. They were just limited. They could only lend out the amount of gold they had in their vaults, and if the person wanted to get their gold back, they were in trouble. So there was a desire to switch, in many ways, to paper money. There's a finite amount of gold and metals and so on. It just makes sense to be able to go towards paper money. But there was a limitation on how much paper money you could print versus how much physical gold. So there was what was called the gold standard versus how much gold standard. And so banks were tied to a degree by how much money they could lend out. And before computers, it was all paper money. So there was still a physical asset. And what gets interesting is that since the advent of computers over the last 15, 20 years, banks have been able to lend out more money because it's not so much paper-based, it's digital, so they can credit you the money on a computer. And at the same time, it's not as attached to gold anymore. So banks have actually been straying away from physical cash anyway. And so this is where it gets really interesting. This is part of the reason that there's a bit of a hubbub about cryptos. A whole lot of things are happening at the same time. First of all, the banks have got control of our money, so that if you want your own money, you kind of have to go through them, which is ridiculous. And if there's a run on the banks or something happens, you can't just go take your cash. So it's not really yours, even if it is actually yours. Plus, we're also becoming a global, sorry, my nose is itchy. Plus, we're becoming a bit of a global economy. So, the idea of unifying our currencies or having an online currency or a digital or global currency sort of makes sense. And in that area, there's a bit of a competition. Well, if we can create a global currency that people can use and one doesn't exist, well, then I'll create one and see if I can get people to adopt it. So that's kind of where you get your Bitcoin, your Ethereum, various other things. And in the process of coming on from outside the banks and coming sort of through a civilian approach, they created the idea of the security came through I'm blanking, I can't believe it, on the whole idea of cryptos obviously coming through with the security which they offer, which I've just forgotten what it is, blockchain technology. So it's interesting because that blockchain technology has already been adopted as a security feature everywhere else, even into areas nothing to do with cryptos. So the reason I bring this up is because then what happens is the banks are getting obviously threatened to a large degree, and the banks and the government are who manage the economy, or who so-called sort of custodians of the economy, are very much in bed together. So the central bank, the banks, the government have to make sure that to some degree they're always they have control. One good reason they want control is for stability. They're supposed to create stability. Obviously, the bad reason is we don't want to have too much control. So the point is, you've got two different things happening here. You've now got what appears to be a desire for an independent, ungovernment sanctioned, sort of bank controlled asset class. That if we want to do things, we can do that way. But it comes with some risks because it's not necessarily going to be as secure in many ways. But I just wanted to balance it out by saying that banks are now trying to compete as well, producing their own cryptos, central bank digital currencies, and that they're not necessarily that they are also digital in many ways. So that if they go and say, well, banks aren't digital and they're not doing the same thing, they actually are. So I just wanted to kind of present that as the case. Where I'm going with this is that if you look at the evolution of our economy and our money, we are going towards at least one solid option, which is digital. We are. So there will be a point in our future where the difference between whether you have a cryptocurrency or a central bank cryptocurrency will probably be the same. That's all. It is definitely in our future. What it is trying to work out now is how it's going through growing pains. How is it going to be, safe? How and again, remember, back in the day, you can steal money from a bank, you could steal gold, you can mine gold, so you could generate your own income. So in many ways, it's not that different. It just seems different. And so for people who don't get cryptos, who don't understand it because they don't think it's real, it's really because in their brains, they haven't really grasped the concept that paper money isn't worth anything. It's only worth something because we assign a value to it. And again, the same applies here. So this is really just a digital commodity as opposed to a physical commodity. But there's so many of them. So where I'm going with this is that cryptos are almost certainly here to stay. The only question really is in what kind of a format. Okay, so we're watching. We shouldn't. It's tricky because we don't really know yet. I mean, over the next 10 years, I think we're still going to see a lot of big changes. Bitcoin was kind of the granddaddy of it. We could see that during this period, I believe it's been adopted by a lot of big institutions. And so when we've seen cryptos take a bit of a hit over the last 12 months, if you don't look at any of the other asset classes, you're going to get tunnel vision. You're going to believe, I don't know, there's going to be a lot of misinformation about what is causing cryptos to go up and down. And then the worst part about it is there's going to be a lot of misinformation about how, what's going to make cryptos rise. And I've seen stuff. I've seen so much really bad analysis. I don't even know the logic behind it coming through my Twitter feed where someone's like, even a month ago, 2 months ago, 3 months ago, Bitcoin is about to start the biggest bull run it's ever had. And I'm like, based on what? There is no sort of validity to that. So the first thing you need to understand is that all the asset classes have been taking a hit over the last 12 months because of inflation, blockchain issues, supply chain issues, everything else that's been knocking stuff down. So when you go ahead and you have a look at gold, gold has been taking a bit of a hit. When you have a look at oil, oil has been taking a bit of a hit. All the major commodities. You can go to other commodities as well. We can have a look here. Let's just see which of these other commodities have taken a bit of a hit. That's wheat. Cotton has also been taking a bit of a hit. There's quite a few of them that have just been getting knocked down. I mean, we've only got so much data on these contracts, but we've seen a lot of. Then we go ahead and we have a look at the indices. The indices have been taking a bit of a hit, almost month by month, day to day, correlated. You can see where a lot of that is going. And this is because, very simple, there's a lot of big institutions, a lot of wealthy people that have a bit of cryptos, a bit of gold, a bit of this in their portfolio. And with what's been going on with inflation, we've seen a move to the dollar. The dollar's been strengthening. And when the dollar strengthens, everything else gets crushed because gold is priced against the dollar. Bitcoin is priced against the dollar, all right? And so we see it getting crushed by that. So there's a straightforward correlation between why cryptos have been taking the hit lately and why equities have also been taking hit and why commodities have been taking hit. It's all there. Strong, strong correlation. Excuse me. Very strong correlation. So once we accept that, then everything starts to make a lot more sense. Then all of a sudden we're like, okay, the move to the downside is not necessarily a reflection on cryptos in general. In the same way as the move over the last 6 months isn't necessarily a reflection on stocks, on Apple or Microsoft. Doesn't really mean anything other than the fact that we've got some inflation, we've got a bit of a bear market environment. That's it. You emailed me to have a section which you missed last Wednesday. I know because you arrived late, so I'm just reading the comment chat. And I thought you were going to email me, but I haven't received it. Could you just double check the email address you used? I'll also give you a backup one as well, just in case I'll just give you my other one, but I would use the Trade with Precision one, and but just in case you also have that one. I'm not sure why I didn't get it from you because I responded to everyone. Okay, so So that's the first thing. So what I'm trying to do is I'm trying to explain how we've gotten to where we are and what we need to see a shift in this. And if you've been following me, as some of you have over the last 3-4 months, even 6 months, this isn't a surprise to you. None of this is new to you because we've been able to predict with a high degree of accuracy, that if this happens in equities, this is probably going to happen in cryptos. So I just want to explain, this is where we are. These are the kind of major levels we want to be paying attention to. And we could see that currently we've got price in a downtrend on the monthly, producing lower highs, lower lows. Okay. I also want to sort of draw your attention to the fact that if you just look at that 50-period moving average, there have been periods in the past where prices come back to the 50-period moving average and ultimately found a bit of support around it. And therefore it's possible, we're going to outline what could happen from here. My issue with some of the comments that came through to me about how, or that were in the Twitter feed about how Bitcoin is about to begin the biggest bull run of its life. The reason that was bollocks is there wasn't anything that really showed any indication of that. We had a monthly downtrend, we had a weekly downtrend. You just can't say that. What you can say with a high degree of probability is, for example, if the monthly is in an uptrend and it comes back to the 50-period moving average and it starts to turn around. If you see something like that, you could say, I think there's a high probability that this particular instrument is going to do another leg up. That is something you could say that I think would be honest and truthful and have a very high degree of probability of actually happening. But that wasn't at all the case. What was when this person was stating, and these people were stating this about Bitcoin. I think what they were doing is preying on the hopes of people, and that's a different thing entirely. There was no technical or fundamental data to support this. We cannot get an increase in cryptos without also getting an increase in equities. They are tied, joined at the hips. There is nothing we can do to differentiate those. Still annoys me I don't have a clean all objects thing, but I don't have that script. Okay, so if we then go and have a look at the US economy and see where it is now, this is what we need to be looking at. The current monthly candle is bullish. We are only 4 days into October. In the past, so in other words, what I'm going to describe to you that I want to see in equities now is the same thing that I want to see happening in the cryptos. So I'm just going to, because they have to happen together. In the past, we might come back here to the 50-period moving average, we head off. We came close to it here, we went past it there, we overshot it, we're in this area now. Is it possible that we could have a move up from here back up towards the old highs? And what you can't do is say, well, if we start going here, we're going to go up there. You can't say that. What you could say that's reasonably fair is that we're going to target the old highs. And then when we get there, then we'll see if the market is going to continue up from there. So your question that you've asked now is, do I think that crypto, specifically BTC, Bitcoin, will go down more? I'm going to make a case for why we might have bottomed out, in short. And I'll make that out for Ethereum versus Bitcoin as well. I think that if cryptos are going to head higher, I think that it'll include Bitcoin and Ethereum at least. I think those two together will almost always be, or at least for the next few years that I can imagine, I think are going to be the leaders of the crypto markets because they have the most history and the most brand recognition, in the same way that gold has its own brand recognition. So the first thing that happens when we reach the bottom is we tend to get a bullish candle. If the second thing that happens is the next candle breaks the high. So for example, we pull back here, we've got a very nice bullish monthly candle, then the high of that candle was broken by another bullish candle. Okay, that usually means the market comes down, turns around, and then breaks the highs, creating a swing low. So we currently have a green candle in the making off the highs of the 50-period moving average. The first thing we need is we need to have a green candle, whether it's October or November, we need to have a green candle finish. So we are going to have to wait and see. We have to do two things. We have to look at the weekly, we have to look at the monthly, but we cannot begin our journey to the upside until we have a green monthly candle. It can't happen. So I'm saying that it appears we are in an area where we could barely produce a bullish green candle. And that's what I want to see if that's going to be the case here. I need to see that finish. So that is part of why you're seeing a bit of a green candle here. Let's mix it up. Let's go look at Ethereum. A little bit of a small candle at the moment. Let's just go through all of these. Let's look at Binance. Binance monthly candles trying to turn around. It's trying to produce a higher low. That's quite interesting. That's very interesting. A nice bit of a monthly candle there, and then a bit of a higher low. Could be trying to do that. Solana, sorry, not Solarium. Solana. Solarium is where you suntan. No, that's looking very weak at the moment, but it's kind of gone down to smaller candles. So smaller candles often precede a move, so I'm not too concerned with that. And then we've got Litecoin and Dogecoin. Yeah, I would start, and then Ripple, and then I would start by looking at crypto. I would start by looking at Bitcoin and Ethereum predominantly, if you just focus on this. So let's go back. Let's have a look at Bitcoin. All right. Part of this is driven a lot by the dollar index. So we look at the dollar index. We look at the data. Do we have anything else here? These are the only ones I've got. It's just very frustrating that dollar index. Yeah, it's the only one I've got. What you can see here is the dollar is taking a bit of a hit. At the moment, it's been very, very strong, and we can see it correcting a bit. And so part of the reason you're seeing a lot of the markets move higher right now. So if we just inverse it, you can see a lot of big moves to the upside. And it is the same. If you go to euro dollar, you can see big moves to the upside. So big moves to the upside on that. If we go look at gold, I'm just trying to give you a sense of how much the dollar is playing a factor. So is this always the case? Is it always a case if we had to go back 1 year ago, 2 years ago, 3 years ago, that would be what we would be looking at? The answer is no. It's really been in the last 12 months where the dollar has been driving everything else, because it's unusual, because we've had a potential world war breakout, because Russia invading Ukraine is, believe it or not, a threat to everything everywhere. If he's going to threaten to use nukes, now he's effectively threatening the rest of the world, because a nuke would impact other countries around it. I mean, it's a real danger. You can't have somebody doing that. So plus we've got the supply chain issues, we've got COVID, we've got all these different things. So the last 12 months have been really weird, not to mention the last couple of years. And so the dollar has been driving it. But that is not always the case. It just is the case right now. And so if you've been a newer trader learning how to trade in the last year, you might be going, oh, well, it's obvious. When you hear stuff in the news, there's a definite correlation. We've got inflation. No wonder the markets are tanking. It's rare that the problems, that there's something in the market that is undeniable, that the whole world is dealing with, like a bear market, and therefore there's a clear correlation between people losing their jobs and the market tanking. In between those periods when life isn't that bad, the markets just can go up and down on their own for different reasons. And so it isn't the dollar necessarily driving it. You just need to understand that right now, it's obviously agitated, and different conditions are agitated, and therefore it's doing what it's doing. I just wanted to show gold. So you look at gold, you can see the bullish price action here on the daily. You look at the S&P, and it's global. We can see it across other pairs as well. You look at sterling as well. You can see very strong moves on sterling. Go ahead and look at dollar Swissy. You can see dollar Swissy getting pushed back down because the dollar is driving that. If you go ahead and have a look, dollar Singapore dollar, let's just see what happens with that. Let that refresh, that's getting pushed back down. They're just, right now the dollar is driving everything. We've got gold that's doing that, and so on. So all of that brings me back to, that is what is causing right now, and we can see it on the actual dollar index doing that. That is what is giving Bitcoin a bit of its boost at the moment, mainly because it's giving it to equities. So if we go ahead and take a look at the S&P 500, which is just a nice, good, in fact, the smartest thing to do, I think, is to track cryptos, which are digital commodities and technology based, with the Tech 100. So if you look at the NASDAQ 100, I think you're probably correlating, they're kind of in the same industry. the US 30 used to be the industrial era. When we go back 1896, when the Dow was set up by Charles Dow, that was shipping and rail. It was, you know, and metals and construction. That was what the world was back then. Now we're very much more, well, we have so much of our society is technology based. So I think you could also maybe track with the NASDAQ. If the NASDAQ doing well, crypto should also be doing well. It's a starting point, but certainly with that in the US 500, the S&P. So when we look here at the NASDAQ, we can see we've had a really good couple of days. If we look at it from a weekly basis, we've got a nice bullish weekly candle. That's really good. And if we look at it from a monthly basis, we've got the beginnings of a very nice potential green candle on the 50-period moving average at a major support resistance level. So we can't begin our next journey to the upside without a green candle. So it's important. Right now, we do have a very nice bullish candle. Could it turn down from here? It's possible. We are still in a weekly downtrend like this. I'll do the same examination on cryptos. But if we start to break above here, for example, we start to become more and more bullish. And the likelihood, if we can break above this high, the likelihood, if we see it happening in other markets as well, the likelihood that we're starting to recover is becoming very, very strong. So there's a little bit of a trend line as well. I would say I don't usually use trend lines, but they're quite good for giving me a sense of bearishness. So I would say that if we start to break through that, then we're definitely this, because what happens is the way the market is moving is generally an angle of momentum. So if it's trending down, it's quite bearish. As it starts to change its angle, it becomes more bullish. And so when we break through this line, that's actually a sign that the momentum is starting to change its angle and starting to become more bullish. So if we start to breach through this, and if we breach through that, going above that, then we are certainly now more bullish than bearish. On the weekly thing, for most of you, you all know this. I don't want to bore you by repeating this stuff, but in short, once we get back up above the 50-period moving average and we have a higher low and we break that, those three things, once we get those three things happening, we are then, it would not be crazy to say that we are back in a bull market. That stems from the idea, for those of you who haven't heard me say it, that during these periods here, we are above the 50-period moving average. There's the 50-period moving average, and here we are running above it. That's a nice bull market thing. So we need to get back up above the 50-period moving average, and we need those things to happen. So that's really the criteria that we need to see on the weekly chart. That also gives you a sense of timing. You're kind of saying to me, could it happen in October? Could it happen in November? It would take 4 or 5 weeks, maybe 6 weeks to happen, and we would need to break above that level, get a higher low, get above the 50-period moving average. Ideally, we wouldn't just see it in NASDAQ, we would see it on the S&P 500 and a few others. If we saw that shift across to the bullishness, we're probably on our way back into a bull run, or certainly at least back up to the old highs here. Let me draw that again. Or at the very least, we're on our way back up to here. Whether we get past it, we'll see. There's a lot of fears of stagflation. So all the problems that we're having right now, cryptos are tied to that. It would be, I would be honestly gobsmacked if cryptos were shining and everything else had not recovered. I can't see that happening. I can't, because there's just not enough money and not enough people to boost cryptos. If other people's money and other money is not surviving in other markets, it's not enough. So I'm just trying to give you a sense of timing here. Once you see those things happening, I think it's fair to say, and hopefully it would be in a webinar here, I'd be like, okay, we've got our break above it, we're in that uptrend, then you would know we're starting to look nice and bullish. We just don't have it at this point in time. But we could be at the beginning of that. We have a couple of things that I like about this. We have a nice bullish candle. We have it across the board, and it's happening on a key level. Let's go and see what it looks like from I'm going to go back to cryptos and show you this as well. So I know you're going, why are we not looking at cryptos when that's the whole point? But also giving a sense of this. We've had a nice correction here from a monthly perspective. We're back into the 618 retracement, so we could have that happen. The same people I trust, Bridgewater, Ray Dalio, Michael Burry, they still think there could be some more moves to the downside, but it's not guaranteed. Could we have another move down to here? Could we be in this for a few more months? Could it get worse before it gets better? Yes. But could it start flattening out now? Yes, it could also start flattening out. So how would I know if it's not working out? Well, if it's not working out, then the market would likely come back up to here, and then start coming back down to this level and then potentially break through. Okay, it wouldn't come up as far as this, or if it did, it would be able to break through that. So we would get a sense, we'll get a sense relatively quickly, probably within next week or the week after, we would know if that's going to be the case. So let's go back to cryptos and have a look at that. You can see there's also a little bit of panic. You have to understand that part of the reason the market is worse with cryptos is because there's a huge portion of the people who bought into cryptos who are extra skittish. They are not your normal investors. Cryptos have attracted, like the gold rush, have attracted people with hopes of getting rich quick, and also, not bad people, good people, but are also hoping to get some nice growth. And some of those people have been burnt and hurt, and now they don't really want to get involved. Maybe they've taken their money out. So in other words, it's taking a greater hit because of people who are scared. And so you've kind of seen cryptos take a bigger hit than stocks, because most the people there's more people who've been involved in stocks for the last 50 years that are not as new to the game as people getting involved in cryptos. So cryptos are taking a bit of a bad rap at the moment, but I believe that they're here to stay, and I think ultimately they will recover. Also, just to argue a point here, people thought that gold would never ever come back down. I was trading in my first couple of years during this period here when gold was going absolutely insane, and people were insisting it's a finite resource, it's never going to run out. It's going to run out. It's never going to come down. You need to get involved in it. And the PDFs and the books that were being sold online as to this is where you need to hoard it, you need to buy it here, you've got to do this. There was a mania about it there that I've seen in crypto. So it isn't so much that people come up with ways to scam people, it's that other people get caught up in that belief as well. Genuinely, people get caught up that it's never going to come down. And then it broke through this level of support and it came down and it got stuck below this level from 2013 until 2019. And so, and during this whole period, a whole lot of people who came into the game at that point didn't know what happened before that. They didn't know what happened before that. So they couldn't relate to that. But seeing cryptos coming back down, if you've seen both of these, you'd be like, oh, well, I've seen gold come down. I know cryptos can come back down. So I'm trying to tell you this is that if gold can come back down when people thought it would never come back down, it's possible the same thing could happen with cryptos. And if gold can recover, so can cryptos. That's where I'm going with this. It can recover, so don't lose faith. The real thing is going to see how quickly it does it. I think this time around it might take a bit longer. Because people got hurt over here. People got hurt this time around when it came down, and people got hurt again here and again here. So they've been hurt multiple times, and therefore I think they're just extra jaded, and they need to see a change. What you will see, if you think about it, people will regain their confidence when cryptos come back up above this line. When suddenly cryptos are back, when Bitcoin's here, people are like, okay, good, it's recovered its value. And then you'll have people who've been watching from the sidelines will start coming in. So basically, it's all about, in this area, as you go through these prices, people will jump in because now it's come back up to a level where they feel their faith is renewed that it's gonna recover, and therefore they can come back in. But these are the major levels. And for now, these are the major price levels. Call it 30,000, 35,000. We really are gonna need to see it get back up above here. But between you and me, a break above this level is a very good one, and it wouldn't take that much to get us above 25,000. 25,000 is a realistic move for us to see that happen, to get above that. And once we solid break above and close above 25,000, 30,000 becomes a possibility. And then you're starting to get somewhere. And again, you can apply that trend line. You can apply this trend line here. This is not to say that I obsess about trend lines, but look, we're very close to almost breaking through that bearishness. We've come down. We could be shifting possibly into a bit more of an uptrend. As I said, we would have something like that start to happen. We're not that far away from it if that's going to be the case. So for me, I expect us to break through this. What I need to see us do is get up to 25,000. I'm rounding up, and I really need to see us break and close above the 25,000. I think that is something it's going to try to do now. Let's go ahead. I want to show you a few other things. So you can see it's just very dry. There's not a lot of, it's not getting a lot of love, but the area it's about to break through now, yeah, it's pretty good. I'm happy with that. You're going to see it start to pick up from tomorrow, probably start to boost a bit more. It's got a nice little level here. It's looking relatively bullish. I think if you were, and also, sorry, also understand the difference between trading and investing. An investor is going to buy and hold. That's kind of what they're thinking. And when you think about it logically, as an investor, this is a fantastic time to buy. Why? Because you can put 500 bucks into it instead of 50 grand. You'd be getting it at a discount. And if it is an investment, you're going to be getting back in at the ground floor again. Even if it takes a year or two to get back up to the highs, you're going to be one of the people going, because remember when it got up here, people are going, oh, I had the opportunity to buy it at whatever it was at 5,000 or 10,000. Now you have that opportunity. So if that's something that you, look, I'm not giving you financial advice. I'm talking about a scenario where people said, oh, you know, I had the opportunity and I didn't do anything. Now you have the opportunity, so get back in. If you're not getting back in now, it's because you fundamentally don't believe in the value of cryptos, because the opportunity is there. The risk is exactly the same as it was the last time cryptos were at this level. That's as an investment. You also, if you don't want to come up and let's say you bought in here and you put 5 grand in, and I'm not, and actually, as I would do it as an investment, again, not investment advice for you guys, but this is a higher risk because we're in the early stages of digital currencies, which could be something that becomes the basis for the next 100 years. It could take a decade or two to work its way out of whatever, or deciding what it is. We need just that patience and a bit of that understanding of what it is. But what I was trying to say here is it's a higher risk, higher reward investment. You can put money into Microsoft and Amazon, into Coca-Cola. Those things have been around. Some of them have been around, not Microsoft, but Coca-Cola's been around for a century. You can put your money into that. The chances that it's going to collapse tomorrow is pretty much as close to zero as possible, as long as we're all still here. But cryptos don't have the same. They are higher risk, higher return. So if you have a portfolio, the safe stuff is an index, a pension fund, Coca-Cola, the things that are proven, they've been around for a long time, they've got that track record. Property, that's safe in comparison. Then you move on to your higher risk, higher return investments. And amongst those, I would include cryptos at this point in time. So what a person wouldn't do is, if I had 10,000 bucks to my name, I would not put 10,000 bucks on cryptos. That's gambling. That's the same as going to a casino. It doesn't mean that you won't be right about cryptos 10 years from now, but in the next year, you could lose all your money and then you're out. I'm just saying as a hypothetical. So what you would do is you would break it up. You say, okay, I'll put 7 grand of my 10 grand into safe things, and then 3 grand or 2 grand into higher risk, higher reward. That's a more sensible approach. But if we were just talking about that portion with cryptos, arguably this area is one of the best times to buy Ethereum and Bitcoin. And again, would I just put it all in Bitcoin? No, because it could be a VHS Betamax scenario, which if you're very young, you wouldn't remember this, but we used to have in the 80s, we had VHS tapes, and actually we used to have Betamax. They were two competing products. Betamax was actually a better quality product, and the marketing VHS won out, and eventually everyone just went VHS. So cassette tapes or video tapes that we were watching from Blockbuster, that was all VHS. But you know, there was a time when there were two options. So Bitcoin and Ethereum could be the beginning of all of that. We could see that as a format. I would split it up amongst all of them with the understanding that, you know, Cardano could just be vaporized or something, or Litecoin. Maybe Dogecoin will vanish, but I think Bitcoin and Ethereum have equal opportunities to grow to the upside. That's an investment. As a trader, ladies and gentlemen, as a trader, you are thinking differently. As a trader, you're looking for a shorter term, immediate move, and you exit the position. So you're not going to be holding or owning Bitcoin. It is not an investment. Please understand the difference. It is not an investment. You could be buying Bitcoin tomorrow, selling it next week. What you are doing is generating an income from the movements, just from the movements. It's not about owning it. And that's really important to understand the difference. Because if you own Bitcoin, it's difficult as an investment. It's difficult for you to trade it because you're biased. You're going, well, I think it's going to go up, so I can't sell it. Even when it's heading down and it's clearly going to go lower, it's hard for a trader to pull the trigger on selling Bitcoin if they own Bitcoin in their other accounts because they're kind of stuck on that. Does that make sense? So as a trader, there is a shorter term opportunity. See from here to here, there's a nice level up there. This is looking bullish. We've got a series of higher lows here. All the markets across that we can see are all heading higher. A break above this is looking very, very likely. So how do I go about taking the trade? Well, I'm on the 4-hour time frame. The broadest way is I can put my entry above this high there. There's just above that one. I don't want a false breakout. I get in there. My stop loss here, or my stop loss here, or there, and I take profit there. And that is it. It's a single trade, guys. Single trade. Yes, Betamax was Sony. Thank you very much. I'm not convinced at this time. I'll show you, but I don't think Bitcoin's going to go much lower. But I'll have a look at the charts and we'll see where it could go. Because the thing is, because as a stock, it's just as a commodity, as a stock, all of those things, the further down they go, the more they start to attract buyers because they get cheaper. So gold would get to a certain point and then it won't go further because buyers will go, okay, I'm going to buy it now. I'm just not going to let it go down anymore. And the same, I believe, exists for cryptos. Once it goes down to a certain point, it just slows right down because it's not going to go much further. There's not much further for it to fall. It can't go minus 10,000. I mean, it can't do that. Generally, it'll just go to zero. But people will become so attracted to the cheap price, they'll just buy again. So it kind of, whereas with currencies, it doesn't necessarily work that way. So this is a trade idea. However, for me, that's not the most attractive. I think this is the most likely target. I think that I will be very safe once we get above that level, but I would prefer a higher low. I'd love for price to do that, get my stop loss tighter to my entry. I want to get it tighter to the entry so that this becomes ideally a 3-to-1 reward to risk minimum, ideally. So, I mean, here's a higher risk setup. You see this bullish candle right here. It's a bullish candle. So it's higher risk, but put my entry sort of there, stop loss here, and target that. Take some profit at 1-to-1, so take some profit here, and that's fine. This is looking to me more and more likely that it's potentially going to break out. Alternatively, tomorrow, look at this. Oh, there we go. Here we go. Beautiful. 1 hour time frame. 1 hour time frame. This is good. I'm happy with this. So 1 hour time frame. Buy now, stop loss here. Get in live. That was my nice little bullish candle. It's beautiful. I've got 50, 20, and 10 in the correct order. I'm trying to think if I can place the trade. I'm trying to think because I've got a crypto wallet, but this I was just thinking of placing the trade. Okay, let's go through it for fun. Let's just go through placing it. So I'm going to use the tool, go to my indicators, keep an eye on the time, go away, go away, go away. Position size calculator. It's a demo one. I'd rather not. I'd rather do it live, but this is it. So I'm going to create the position size calculator, go on, have a look at it here. I want to see my lines. I can see them there. I want to go long, which is fine. I want to go long. I'm going to go instant. Where's my stop loss? Where is my stop loss? I need it here. I need it at 19,800. Where's my stop loss? No, man. There we go. So this green line, that doesn't make sense. Let's go through here. This is terrible. Stop loss color. Why would you make your stop loss green? So that's going to be red. My entry price is green always. Nice solid green. Let's make stop loss red. And take profit can be purple there so you can see it. Magenta, sorry, take profit. Stop price, stop loss, stop price. That's fine. Let's see what that is. Let's mix up the thickness so we can see them. There we go. Here's my entry. I'm going to go live. Stop loss here, just underneath there. Go live. Where is my take profit? I don't have it here. So I'm just going to put this in at 22,350. Sorry, bear with me. My candle countdown must be bottom right, or bottom right, right, left, down. I want it out the way. Going here, my take profit is 22,350. There we go. That's it. Account balance risking 1%. There we go. So I've set it up. There's my trade. What you want me to see, take partial profits. It's already heading higher. It's already heading higher. But let's just go do this, go through it correctly. I want to take 2 trades here. So script take profits, do that at 2. Show, so that script says take, split it into 2 orders. Show point value, true. There we go. Cool, done. So if you look now, I can split it into 2. So the difference between, where's my take profit order? 23, what was it? 22. There we go. So I want to bring my take profit down to here, this one. I'm going to bring that to 1-to-1, give or take visually. So I've got a final take profit there. I've got that take profit up there, and I'm just going to drag and drop. So it'll should split up the orders, and we'll just draw the script in there. Let's see if it does it. And there's my orders. So I'm in live on those 2 trades. So they both have roughly the same entry. Stop loss is where it is, and my take profit is different. So I've got a 1-to-1 take profits, give or take, and whatever the difference is there, it's something like a 4-to-1 on that trade. Okay, so that's what I've done on this. Now I think overnight we'll have a bit of a correction. Would have been nice to get in right where I was, the closer, but it is what it is. So is it possible that overnight the market could come back down? It is possible, but if it's going to break out, if we're going to see a follow through tomorrow of the general weaker dollar bullish momentum, I think we're going to see this continue to push high. My stop loss should be safe. Sometimes you can be right about the direction, but you get triggered in, stopped out, market comes back down, and then it takes off again. And that's the risk you take with every trade. I wanted to show you that. So that's Bitcoin. Now, if we go ahead and have a look at the, if we look at where it is now, so we want to get a sense of what else have I got on my chart here. So let's just get rid of all the objects here. I'm going to go list them all again and just delete. Just want to clean up my charts a bit. Oh, goodness, this is going to take a while. This is me trying to clean up all the objects. I just wanted to kind of clean up the, anyway, never mind. So if we break through where we are now, if we break through here, the next level down is likely to be these lows here. 13, call it 13,000. 13,000. So you're asking me, if it breaks down, where do I think it's likely to go to? 13,000 is the next furthest point. After that, I have to see how it reacts at that level, and then know how it's gonna go from that. Okay. And I want to see if that's going to be the case. So there was a 1% trade split into two, so 2.5% risk trades, right? And so if we break through that level, I expect it to go down to the next level. I think there's a good chance if we get this bullish momentum to continue by the end of this week, if the dollar truly is going to take a break, if it really is, then I think we could see a nice boost up by the end of the week. We could see it go there. And on this scale, that's not a really ridiculously big ask. On my daily even, it's not a very big ask. What do you guys think about that trade idea? I feel like it would have been more, even here, you could have potentially have gone, but that was looking really nice and bullish. There's definitely a level there. If we break through that level, I think we're likely to continue up. So what's the bad stuff that I did? What are my criticisms of that trade that could have been done better? I have not waited for a confirmed breakout of that level. I've taken the trade instead on, I believe the momentum from the general analysis is going to carry it through, but I've also accepted that I could have been premature, and therefore it might fail, come back, stop me out, and then I'll have to wait until it does break through the level and then get another trade to the upside. What do I think it's more likely to do now? I think it's more likely to go break through that level and go up in the next few days than I think it is likely to fail. And that's my assessment. And if I'm wrong, I'll know it very quickly. I'll know very quickly. The market will tomorrow will produce an incredibly bearish day. I had this happen a week before last, but the market seems to have recovered. So let's go look at this. Let me give an example. When we go look at this, the market on euro dollar was showing really nice bullish divergence, starting to produce high lows across the board. It produced a very nice kind of double bottom, started to break these highs, was going really well. CPI numbers came out 2 Tuesdays ago, produced this heavily bearish candle, which came down here, and now we're back up here again. So collectively, the euro has been trying to turn around, this whole period. Got pushed through it and now is back up. So I think we are seeing a continuation of that attempt to turn around. I really do think we are seeing that. The longer it takes for that turnaround to happen, the more likely it is to be not a 4-hour correction or a daily correction, but either a weekly or monthly correction. And if this has taken almost a month to turn around, I suspect it'll be a weekly or monthly retracement. If you look at it from a weekly thing, we're already back up into the moving averages. But if you look at it from a monthly perspective, we have got the possibility, very real possibility, of going up quite a bit. We might not even be halfway back up to where the dollar will resume its strength if it's going to do that. So that's why I think that there's a strong possibility here that this has still got real potential to hit through up to those highs. We will see if that's the case. Once it gets there, then I need to assess what's going to happen, because it's got to get through all of this. But as a trade, shorter term, I think that is a very high probability move. That's why I'm going to take profit, because maybe we'll struggle here for 3 months and then go down. The point is that during these periods, there are shorter term, very high probability moves where you can still make money, but it's not the same as owning cryptos. It's not the same thing. It's really important to distinguish that difference, because if you aren't clear about why you're doing what you're doing in the markets, and this is normal, everybody makes that mistake, but you have to learn to be very clear. Why am I selling my stock? Why am I buying my stock? Why am I selling euro dollar? You have to know, because then if it's going in your favor and you're making the money and you don't bank it, think about all those people who bought Bitcoin, and when it was up here and they had tons of money, they didn't take any out of the market. You should have a rule. You go, okay, I've seen all the horror stories of all the things that happen to people over here. If I buy now and I'm up a substantial amount of money, I'm going to force myself to take half of it out. Because if it comes back down again, I can take that half I took out and buy more. That's the kind of thing you need to do. Warren Buffett, I'm a big fan of his. He's always like, well, if you don't need the money and it keeps going, take it out. But that's not the same here. There were people who became millionaires and multimillionaires and were broke at the end of it. You can't afford that. If that's going to be your situation, you're not Warren Buffett. You need, if you are suddenly in possession of millions and the most money you've ever had in your life is 15 grand or 10 grand, take some of that money out, put it into property, put it in something else that is not at risk. This is more about kind of protecting yourself. I think most of you can understand or relate to what I'm talking to. Let's go and have a look at, so again, those will be the leaders. If you're wondering why I'm only looking at Bitcoin and Ethereum, I'm focusing on them because the others will come through, they'll do the same thing. And what I like about Ethereum, because we've got a couple of minutes left, is that if we produce a nice bullish candle here, especially if we break that high, that becomes a very nice signal. We'll have to get through this level, but just breaking that high produces a swing low. That means we've produced a higher low. Remember, to go from a downtrend, you must have that. You need a higher low to do that. And that would be the basis of that. It would be really good. A break above that and a move to up there, and then we'll see. And I think it looks like it's trying to do that. We'll know, actually, funny enough, when it gets here, you'll know pretty quickly. It sounds very odd, but markets tend to do those measured moves. It's got to get up to here, then it's got to get past that. This area is a battleground for it. If we go through the rest, so Binance, this is also, look at this. These are great little signs of bullishness. That is a bullish sign in itself, but then you got another one. So these two together form what shape? What shape does this? Which is what's happened there. Okay. It's a good sign. That's got a high probability, not guarantee. I would say, as opposed to everything being so bearish and pessimistic, that's got a minimum 40% possibility of breaking above that. I think it's a real chance. I don't think I'm daydreaming. Solana, nice little move there. Let's go back down to that daily. Look at the bullish price action, all of it. There, 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 there. Look at this generally trending higher. So that's a higher low. That's a higher low. In other words, bullish divergence. A lot of buying candles here. Most people get in when it breaks above there because they need to see more evidence before their confidence is back in, but that's what it is. It is my bias, a double bottom. Yes, absolutely. I'm making my case to you guys. I have a little bit of experience to back it up, but I'm presenting a case to you. I'm trying to present the evidence to you that, and sometimes I might not put into words something I've seen, but that's because it's all unconscious. I can't always do that, but I want to try to present that case to you for that. Cardano, also some nice little bullish signs here. Litecoin, also lots of bullish candles here. Dogecoin, I wouldn't worry about this one too much. These are prone to being interfered with. You get certain ones that are, prone to it. I'm going to say something I don't intend to offend anyone, but I've lost respect for Elon Musk. I adored the guy, man. I've been a fan of Tesla for 10 years, really. Absolute fan of it. But his stuff has changed. Something's changed. He used to post really smart stuff, and now I feel like he gets political and he's more emotional, and he does some weird, like, I don't know what to say. And I own Tesla. Anyway, I worry. So I don't like it that he interferes with things like this as well. You shouldn't do that. It's a responsibility thing. Oh, look at, okay, what's this one? Okay, that's Ripple. That's Ripple. That, ladies and gentlemen, that's a buy signal. Why is it a buy signal? Well, we've broken above these highs, We've come back, produced a bullish candle, came up. Yeah, we produced a lower high, we did. We came back, but we produced a higher low plus a really nice bullish signal plus a buy. And what I would like you to take away from this, because I've got to wrap up now, I want you to take away how I've looked at all the markets. So now I have a clear understanding why euro dollar is going up, why the pound's going up, why the S&P is going up, why cryptos are moving higher. There's a clear correlation. and I have an understanding of it. So I have a degree of confidence that stems from that. And then individually, I can see that this is a really nice setup. If you compare this to Doge, it's got the same kind of stuff. It's got these bullish candles here, but Ripple is like, the whole thing about Ripple is different. It's moving a lot higher. That's a daily candle. It's already broken outside of that consolidation with a nice strong bullish candle. These are looking relatively bullish. It's got to get through that. I agree. It's got to break through that, but that's looking good. So I would keep an eye on the markets here. I wanted to explain the difference between a trade and an investment. Okay, XRP, cool, good. Yeah, I liked it. I wanted to explain the difference between a trade and an investment because they're not the same thing. And they carry with them dangers. They influence the way we think, and then we make decisions based on that. We put our money in based off those two different things. And so we'll see how that goes. Those two trades aren't really going anywhere for now, but we'll see. I would look forward on any of the next IC markets that I am doing. I will have a look at this account if you prompt me, okay? My next one, if anyone cares, I hope you enjoyed this, I really do, is my next one that I am scheduled for. I think it's Monday. Is it? Is there one on Monday? Give me a second here. Yep, Monday night. Okay, so my next one that I'm doing is on Monday night. We can see how it's done between now and then, all right? So with all of that, folks, I hope that you found that instructive, useful. Sometimes you can't please some people, or I might have upset some people. I didn't mean to. I wanted to give you a real sense of kind of how we've done the analysis, where I think it's likely to go. I think it's much more likely to go up now than it is to go down. Are we at the bottom? I can't tell you that yet. It's too soon. It could be the bottom, but I won't know yet till we start to break above certain highs from where we are. Then it starts to look way more bullish than bearish. But I can say this: the bearish momentum has started to shift to more neutral than anything else. Great. It was an absolute pleasure. And I don't know if the camera helped, if it was annoying, or if you preferred being able to see a human being on the other side of this. It's okay. But I enjoyed it, so really did. And thanks for drawing my attention to it as well. All right. Great. I'm going to let you go. Thank you. And I look forward to seeing you on Monday. We can have a look at this again amongst the other things. We'll take 5 minutes and have a look at it. Thank you, guys and girls and ladies and gents. If you have any questions, if you have any issues, sorry, to do with your account, need any assistance with your platform, please don't hesitate to get in touch with the fantastic folks at IC Markets. We've got a contact number here. You can obviously follow them on social media. Yep, if you need any help with that, please get in touch with them there.